Hello and welcome to traders and investors. I'm glad to present to you the cryptocurrency market review presented by analysts and experts from fx.co portal. Here we go. Bitcoin continues to move lower after sell signal was confirmed on the daily timeframe. As a reminder, during the previous sharp sell-off, only one bearish fair value gap was formed, the key zone from which a price reaction and a continuation of the downtrend could be expected. This bearish FVG remains the only valid sell-side point of interest on the daily chart. On January 15, Bitcoin retraced into the zone as a part of a corrective move and has since declined by approximately 3.5 and 4,000 USD. At this stage, traders could only manage existing short positions rather than look for new entries. We also previously highlighted a bullish fair value gap on the daily chart. The pattern has not been invalidated and didn't produce a reaction. However, it is important to emphasize that any buy signal at this point should be viewed strictly as a part of corrective move. From a broader perspective, sell-side setups remain the primary focus. Bitcoin has officially broken its bullish daily structure and is now developing a confirmed bearish trend for the first time in 3 years. Recent upside moves into a bullish order block between 98,000 and 102,700, as well as the bullish fair value gap, has already been mitigated. The next major draw on liquidity sits near the 70,800 USD level. On the sell side, the only high probability point of interest is a daily bearish fair value gap, which has already been filled. From here, short positions should be managed carefully, with confirmation-based entries favored over anticipation. On the 4-hour timeframe, price has broken out of a prolonged consolidation. However, upside continuation may be limited, as price has already tapped into a daily bearish fair value gap. If the market shows a bearish reaction with confirmation, a continuation of the broader downtrend becomes likely. While the short-term 4-hour structure remains bullish, the CHOCH level around 89,300 USD is critical. A break below this level would confirm a shift back in favor of the dominant bearish trend. Traders should also monitor the local bullish fair value gap, which could still support a short-lived corrective move before further downside. On the daily timeframe, the broader downtrend remains intact. At the same time, the corrective move across the crypto market may be nearing its end, as Bitcoin has already printed a sell signal. When it comes to Ethereum, there are no clear sell-side points of interest on the daily timeframe, and none on the 4-hour chart either. As a result, near-term market direction should be guided primarily by Bitcoin. We also want to highlight a key liquidity pool on the daily chart, marked by the trend line. Below these levels sits a cluster of stop losses and pending sell orders, which effectively represent liquidity. We expect Ethereum to trade below this trend line, triggering that liquidity. The nearest downside targets remain at 2717, 2618, and 2400, there are only the initial objectives. The overall downside potential for Ethereum is significantly larger. If Ethereum were to sweep liquidity above the December 10 high, combined with a confirmed bearish reaction for Bitcoin at the daily bearish fair value gap, this compliance could be treated as a high-quality sell signal. That's all for today. See you online soon, and good luck.